Welcome. This is going to be the first in a series of videos that Open Markets are showcasing with some of Australia's leading fintech clients that connect to markets using Open Markets. And today, I'm absolutely delighted to be joined by Nick from Perla. So, Nick, maybe before we kick off with some questions, do you want to do a quick introduction about yourself and tell us a little bit about Perla?
Thanks, Dan. Good to be here. Thanks for having us. So, for those who don't know, my name is Nick Nicolaides. I'm one of the co-founders of a wealth management app called Perla. We kicked off during 2021 when, if you remember, meme stocks were all the rage. And what we did differently was we focused on a segment of the market that had no interest in meme stocks. We've built a business around automating investing into the stock market, primarily through ETFs. And it's all been under the umbrella of the stock market as a simple tool to reach financial independence. We'll talk a bit more about that later, but Open Markets was actually our first integration partner. That was how we got started. And so thanks to the team for believing in what back then was, just a couple of people and a few lines of code. So yeah,
You
here we
love the
are.
code. Yeah, but it's gone really well, Nick. I mean, I think your 2021 start, we're getting close to 2 billion with us now, which is a huge number, a great milestone, and well done to you all for getting that far. But I've got three words that I want to call out: get rich slow. So tell us all about that. What does that mean?
Well, I think it means forget everything you know about markets and trading and investing and follow some very simple rules. And if you do that, you'll probably be wealthy at the end of the day. And obviously, it's a bit of a dig at, get rich quick schemes that I think people are still falling for today. And that's where we got started.
Yeah, and it's working well. It's working well for you. And I think for people listening, this is obviously a recording. Today's the 8th of April. So what that means is last week we had Trump and the tariffs, and we had some pretty big volatility and movements on markets, biggest of which was yesterday, a huge down day, today a big up day. But it's really interesting with your customer base and the get rich slow. When I look at the number of buys and sells we had yesterday, lots of buying. I think it was almost 5 to 1 or 6 to 1 on a ratio. So what your customers? They're not heavy traders. They're not traders in the market. They're often following this get rich slow mentality you talked about. So what does that mean on days like yesterday?
Yeah, absolutely. So, I mean, I said before, forget everything you know about money and markets and in trading, right? And this is where it comes through. Now, there are very smart people all around the world, and they're trying every day to predict what's going to happen, and good luck to them. Some of them win, some of them lose. What we wanted to do was unlock that part of the brain for everyday Australians, and we sort of tried to come up with a model whereby it wasn't about buying and selling. It wasn't about trying to win. It was actually just understanding the concept of buying the market, and that's pretty boring, right? So you say get rich slow club. What we actually launched with was boring investing for the long term. And we've gone
Right.
from boring investing for the long term to the get rich slow club. And, what does that look like today? It looks like, almost 100,000 something year olds buying all of your greatest hits in terms of indexes, S&P 500, Nasdaq, Aussie 200, Aussie 300, and a range of others. Uh, And on the platform, buyers actually outnumber sells 9 to 1 long term.
Right.
You know, to put it into finance speak, our community have just got the concept that an ETF is a wealth building tool, not a trading tool, and it's a store of value that they can keep adding to. And that's why on days like yesterday, where I think you'll see a lot of stats in the media and people will be talking about how volumes are up. It's pretty remarkable for our volumes, which were I think up 40% on the week before in one day, and that to stick true to the buy and hold mentality. So people aren't panic selling yet, crucially.
Yeah, really, really important. So with that demographic you talk about, so your customer base, I think this is one of the things that when we look at some of the fintechs we're going to talk about, in these videos, everyone's got a little bit of a point of difference. And we talked about the get rich slow or investing for the long term, boring investing for the long term. That's your point of difference. So, what does that mean to the demographic that sits within your customer base? So, male, female, age, so forth. You've got some
Yeah,
typical
yeah, yeah.
customer.
So
Is there ever such a thing?
yeah, no, and I think you're right. I think most apps today need a point of differentiation, and we've obviously sought to do that by being the independent voice of passive investing. And we've done that in a few different ways. We led with education first, so we focus heavily on content, and that is really the answer actually. So it might be good enough to improve financial literacy around ETFs. It might be good enough for people to get a handle on their saving, meaning they have money to invest. Um, but the real crucial problem to solve is how do you keep someone happy for 20 or 30 years? And, they're going to get a paycheck next month, hopefully, and they're going to be able to save a little bit next month. But how do you keep people on track? And so when people ask, what has Pearler done that's been so special? The answer isn't very exciting. It's a relentless creation and pursuit of content and education that all comes back to what are a couple of very simple themes. ETFs, buy the market, buy and hold. And our challenge, which I think we're doing okay at, is how do we put out 10, 15 pieces of content a week, engage with a couple of 100,000 Aussies a month without talking about top movers or top losers or top themes. And so far, it's been 4 years and we've never actually talked about a stock at all,
Yeah,
ever.
yeah. And but just going back to that customer base, Nick, is there any particular segment that is a typical Perla client, if there's ever such a thing?
Yeah. Yeah, no, I mean, I think the typical Perla client is your average person. I'll tell you some stats. I mean, we're about 51% women, 49% men, which I think is an outlier for the industry to start with. The ages are pretty typical. So, the biggest chunk of customers, say 50%, are, in that real millennial Gen Y bucket. So let's call that, you know, 30 to 45. I'm going to get the dates slightly wrong, but that's the biggest chunk of customers. Interestingly, we are evenly split older than that and younger than that, right?
Yeah,
So, Gen Z haven't really reached earning potential yet, but that's a growing component, obviously. But, I think it's important to note we're not just seeing this as something only for 20-year-olds or only for 45-year-olds. And so when you look at that and you go, fairly even gender, fairly even age split, you go, well, there has to be something from a psychology perspective joining them. And obviously, I could talk forever about passive investing and those sorts of principles, but I think it just comes down to there is a subset of people who haven't historically been talked to or engaged with by finance. They don't get out of bed thinking about annual reports. They don't feel like they see themselves in markets and the traditional, imagery that you might think. But they're successful, hardworking people, and they're absolutely capable of generating market returns. And it's that person who is well employed, well educated, a self-taught investor that decides they're going to shun what they've always sort of been told about the stock market and do it for themselves. And crucially, they just want to get to a point later in life where they don't have to work anymore,
yeah.
and they've
So
figured
what
out
about
that's the goal.
what about that life cycle of wealth investment? So let's say I was an early customer of Perla, 4 or 5 years ago, and let's say I go 5, 6, 7, 8, 10 years generating wealth with Perla, and I do well. I've been putting in slowly into the market, diversification. We get those returns. So let's say I build 500,000, 1 million, or more of wealth. Is that going to be a challenge for Perla to keep those kind of customers? Will they be looking to move to bigger wealth advisory firms, or do you think you've got a good opportunity to keep them at Perla, Nick?
I mean, it's obviously our ambition to keep them. We think if we just start with where we're at today, and then we'll talk a bit about what happens in 10 years. But you know, People my age and younger, their first positive relationship that they're building within financial services is with their share investing app. It used to be the bank, right? Now bank accounts are completely commoditized. You flip and change through them like anything. Your first asset's probably not your house, right? So it's not the bank manager you're talking to. And yeah, there are lots of apps out there, but fundamentally, the first positive step people are taking is buying shares, and that's the catalyst for a lifetime of building wealth. So you gotta believe that there's been that cultural shift. That's what I believe. And if you look at it through that lens, then the ambition for Perla should be a holistic wealth management platform that takes you from your first saving through your first investment, building equity to buy a house, retirement, and all the assets and products you need to do that, right? Including advice. That's the ambition. So back to your question, you know, where we're at today for people who don't know us, we've already got Gen Alpha investing, with their parents investing on their behalf. We have Aussie shares, US shares. We've got a retirement product, and we've got a product that's about to launch for specifically for first home buyers. So we are already in the transition away from, well, a broker is someone who helps you buy and sell shares, to what we think is the future of financial services, which is, stepping into the void of the old school bank manager, right? Your friend, your trusted advisor. That's going to be Perla. And we're going to help people achieve those milestones. And yes, it's going to include advice. It's going to include multi-asset strategies. We already obviously onboard SMSFs, thousands and thousands of them are with open markets via Perla. Um, and so it's not exactly a lack of products. It's the user experience that we are building around it. That's what's got to come.
Yeah, and it's great to hear you talk about the future of financial services and the vision, if you like, for Perla there. And you'll remember about 6 months ago now, you and I and one of my colleagues, we went up to the Singapore FinTech Festival, obviously in Singapore, and that was a huge eye opener, I think, in terms of what's coming for fintech, not across wealth management necessarily, but right the way across the board. And unsurprisingly, AI, huge thematic there has been for a number of years there. How are you thinking about that at Perla, Nick? It's moving at warp speed, I think. We think and talk about it all the time, as do many in our industry space. But what does that mean for Perla?
Yeah, I mean, it's something we've spent a lot of time on. And I think, when you're a startup in financial services in Australia, you've kind of got to balance these very two fundamental traits, right? So we are a technology business. We move incredibly quickly. We ideate and publish things incredibly quickly. We've built a range of tools already, none of which are public, right? And where we have focused is on, let's call it, a light layer of conversation and advice. So nothing, that's going to blow anyone's minds. But at the end of the day, the young people that we engage with every day, they don't want a hyper personalized experience. They want answers to their questions. They want useful information, and then they want to be able to go and action it. Now, I said that we've built a range of things that aren't public. That's true, and we're working on them, and they're actually pretty impressive. But I'm also a chartered accountant and responsible for a business and licensees and a range of other stakeholders. So it's something where, again, that second trait is, we don't necessarily want to be the canary in this instance. It's going to be something that we take very carefully. We engage with our stakeholders, particularly our licensees, and we want to make sure that we can balance being fast and nimble, and obviously doing things within a heavily regulated environment. I think I'd say most people are probably approaching it that way. I don't think there's going to be anyone out there necessarily who can do it faster than us. But there are certainly businesses out there with probably teams of lawyers bigger than our entire company. So we'll
Yeah.
see. We'll see who goes first.
So Nick, thinking forward, we're talking about the future. What does the next stage of growth look like for Perla?
Yeah, it's a great question. I lie awake every night and think about that. We think that there's two parts to this. We've got a core business and product that's growing organically very quickly, and we think that shows that people want to be engaged with on the simple stuff. So we're going to continue to do that and be better at that. And what does that mean? It means better content, faster and better service, and continually improving the app. We're 4.9 stars, and we just want to keep that and keep that growing. And then I think the most exciting part of our next phase of growth is, I touched on earlier, a move into what we call like the first home market. So no, we're not working up mortgages yet or mortgage broking or anything like that, but we've got some really innovative things coming down the line that is targeting the big problem we see, which is young people getting that deposit together in a world where markets are up and down and house prices are, seemingly going up all the time. So, we have two very, very distinct strategies. Keep doing what we're doing and get better at it. And then make this jump into the first home buyer market, a market that we think is actually, you know, obviously saturated with lenders, but not enough out there for people who are just trying to get those dollars down. So it's pretty exciting.
Okay, one to watch out for. Well, look, Nick, it's been great to have you. We really appreciate your time here at Open Markets. We value you hugely as a client, and best of luck for Perla and that future period we're talking about. Can't wait to see you soon. Thank you.
Thanks, Dan. Thanks for the chat.
Cheers.